And remember, somebody that's an employer that's doing kind of everything they possibly could wrong, they're not paying it electronic, they're not paying on time, they're not filing on time, they could get hit with all three of them. So that failure to deposit is graduated. So it's based on the number of days that it took them to make that deposit. If it's within just the first few days, 1 to 5 days, it's just a 2% penalty. Between 6 and 15 days, so that's hardly, just a couple weeks out, it's 5% penalty, and anything more than 15 days is 10%. Now, if they go ahead and send them a notice, and they hurry up and, pay that notice real quick, if they don't happen to make it within 10 days of the notice, it rises to 15% instead of the lovely 10%. But if they turn around and they're supposed to pay it by electronic funds transfer and they didn't, instead of just the 15% maximum, they could get another 10% on top of that because they didn't do an electronic funds payment. So another type of a penalty, we're looking now in the accuracy ones. So these are more like they come out of the exam arena. It's commonly due to an audit or notice or something happening along those lines. There is an underreporting income. So if it's substantially understated, 20% of the tax that is understated can be assessed. So they understate by a large sum of money, 20% of that amount gets assessed as a accuracy penalty. What is a substantial understatement? We should stop for just a second and explain that. Well, for individuals, if it's understated, that is calculated to be anything more than 10% of the tax required to be shown. So only 10% threshold isn't all that much when you think about it. If they're supposed to show $100,000 of income, that 10% is just a $10,000 mark, but lower amounts of income, it doesn't take much to breach that mark. Or $5,000, whichever is a greater number. So if they go, okay, we understand you don't have much income, we're not going to really hit you with that, 5,000 becomes your threshold instead. Now, here's a little asterisk I have in here, the QBI exception. This has to do with our new tax law, that lovely Section 199 Cap A. If you happen to use that deduction, they take a qualified business income deduction, it changes this rule. That threshold lowers to only 5%. So just be aware of that as we're talking about penalties. There's a special exception that happens to occur now if you use that exact deduction. So 5% threshold is not that much to breach at all, and you can get hit for that. Sorry, hopefully you can take that section out of my... All right. And for negligence, if they're considered to be negligent, it's an additional 20% of the understated tax. So this is where it goes not just that they're understated, but they're considered to do it more intentionally, then it adds even more when we're looking at these penalties that can happen. As we look at preparer penalties, there is if you understated the taxpayer's liability. If you're unreasonable in your positions, they can take the larger amount, either 50% of whatever income you got from doing that service for the client or $1,000. Unless it's willful or reckless, then it's 50% of the income you obtained from that service or $5,000. And this is a per understatement. So they're looking really heavily in penalizing preparers that do wrong. So not saying that you're in this category at all, but just to let you know, these are just, we're talking about the world of penalties and how they're calculated and what happens out there. Other types of penalties that can exist for preparers, and this all comes from the Internal Revenue Code 6675, and one of my observations, I noticed a lot of these 66 numbers within the Internal Revenue Code are kind of like bad provisions and penalties and the unpleasantries. So the things that can hit preparers are if you fail to furnish a copy to the taxpayer, if you fail to sign a return, or give your identifying number, so your P10 number, for example. If you fail to retain a copy or list of the taxpayers you do tax return preparation for, or if you fail to file a correct information returns like 1099s, W-2s, etc. And that one is $50 per each occurrence, up to $25,000 maximum. So there are lots of other types of penalties that can hit preparers they're really just trying to crack down on the preparers that are doing wrong things. So this is just like letting you know of it and that you're aware of it out there. Another type of one is if you happen to negotiate a check on behalf of a client, $500 for each check, or failing to be diligent in determining eligibility for earned income credit. I know within this now we've layered in child tax credits and education credits, and I hear word we're adding more to due diligence next year, like head of household and some other fun things, but they're doing $500 per each failure. So yeah, it's not going to really stop there. They're going to keep adding more into this, and the idea is if they keep adding more penalties, that it's trying to push us to be more compliant in every realm, as a taxpayer, as a preparer, everything they can do in that regard. There are additional little ones, and these are the more serious ones, you can say. So Internal Revenue Code 6700 is if you promote abusing tax shelters. 6701 if you're aiding and abetting understatement. Fraud and false statements as 7206, or fraudulent return statements or other documents is Code Section 7207. Now, usually the ones as you get higher in those numbers, this is my other observation, the 7200 series, those are more criminal type of penalties and issues. So these are all different types of ones that live within that world of preparer penalties. And this, again, isn't saying that you should have any direct worry. It's just making sure they're on your radar. If you disclose or use information by a preparer of a return, this is kind of an interesting one to me, because if you use information, I mean, that could be as innocent as, I mean, what kind of information is on a return? But if you don't have permission to say that you can use that information, I think there is some open discussion on that in our industry, but they have that as set up as a penalty, $250 per each occurrence, and it can be up to $10,000 per year. There's also a criminal section of the same thing. So there's not a lot of difference between both when you look at it, between kind of the civil side and the criminal side. If you disclose or use of information by preparers of returns, I'm looking at that going, well, it's kind of read the same way. But in one sense, you're guilty of a misdemeanor. So we're talking about the criminal side, if it's knowing or reckless. And if you're for any other purpose than preparing or assisting in a preparation, then they can fine up to $1,000 and imprisonment up to 1 year. So, and of course, they can layer in cost of prosecution and everything. So bottom line, a lot of these penalties have a criminal side to them that parallels it. So there's not a lot of distinction between breaking that rule on the criminal side and on the civil side. But a lot of it comes down to intent. That's really what they're looking at. Other types of civil penalties that exist out there, and this is now we're kind of transitioning back into how it looks on the client side of things. There are FBAR penalties, and this is in that world of, if we talk about the foreign world, the Foreign Banking and Reporting Act, there is a penalty for failure to file. If it is considered non-willful, this is like, hey, I didn't know, I really didn't mean to do this. It's up to $10,000 for each violation. So that's like for each year that they failed to file the FBAR. However, if it's considered willful, meaning they knew about it and they just didn't do what they were supposed to, it can be the greater of $100,000 or 50% of the amount in the account for each one of those years that they don't file. So that's a whole big deal. The way I look at it is, what if that 50% of the value of the account isn't all that much? They go with the greater one. The greater one is a $100,000 penalty. That one I've always thought just seems so very extreme in comparison to a lot of the other more innocent penalties we see out there. But again, they're using penalties as a way to encourage compliance, certainly. So this is just an example. In that case, each year you don't file is a separate violation. So 3 years worth, that's 150% penalty, or everything you have in that account plus half of it more, or up to $300,000. So that's a big deal. Other types of civil penalties that exist, and there's this one I paralleled and showed what the Internal Revenue Manual references to it. If you fail to file a correct information return, there are different layerings. They kind of started increasing these, of course. So if it just happened to be way back in time, before 2010, $50 a return. So 1099, W-2, whatever that is, per each one, it's $50. And then they max out at $250,000. So if it happens between 2010 and 2015, well, that jumped up double. $100 per return, or $1.5 million maximum that a business or a person can be penalized. But after that, and then each year now after, we're going to have an annual inflation adjustment, we're looking at 260 returns, so more than doubling. and that is a maximum of 3.2 million per year. That's our indexed amount for 2018. So what they're doing is substantially increasing penalties in order to try to force compliance for that. So all the people that think, oh, I don't file 1099s, that's no big deal, right? Your 1099, each one not filed carries that penalty, as well as the 1096. So one contractor, one 1099 and one 1096, that's still over $500 penalty. W-2s, W-3s, all those fall within this world of the information returns. But the little bit of the silver lining, right? All this I've been telling you about is all the penalties and all the bad things that can happen. However, there is a way in these civil penalties for failure to file information returns to possibly reduce the penalty. So check out this IRM 20 section, chapter 1, section 7.8.1, reducing the penalty and failing to timely file. There's a little bit of help there as well. So that's going to help to maybe give you some silver lining and know there's ways to combat that. But what we're getting into next is more and more about how we solve it now that we kind of have an understanding how they're to be calculated.